Good morning, traders. C for eMiniWizard.com and MarketWizards.com. It is about 9:15 on Thursday, the 6th of December. And it will feel like a Monday because some of you were playing all day yesterday and first time back at the desk. So again, get your sea legs first before you do a lot of anything. A reminder, trading is a risky proposition. Use risk capital you can afford to lose, and best to get an education before you start playing this game. Going give the market your money, or you're going to give a mentor your money, but one way or the other, you will pay your dues. All right, we're going to take a quick peek at a few ideas, and there's some conflicts that need resolving. If you played overnight, you saw some of the posts I made last night before typical bedtime, and then during the night. I get a little bit older for this kind of stuff overnight, but still, my heart is in it. I love this business, and so when the market is moving and you have some ideas, you play that. That's the beauty of this business. You can play anytime you want. So typically I'm not a pajama boy, but last night I thought it would make sense to take advantage of a descending triangle. And this is a 30-minute chart. I was also looking at a 15, which has been very good. And this was a bounce. Remember, we said, if you read through the post, I said, okay, use that 82 to 85 resistance. I was looking at this chart with a 30 as a backup, and this thing came down. And then I said, make sure, by the way, that you are paid ahead of that 49.75 low, so 52-ish. I said, I think it's time for a bounce. And sure enough, we got the bounce. That's a profit-taking swing, and now those traders are covering ahead of the open. So that's why I believe we get this one last swing coming in this direction. So anybody who took my advice and took that short from up here, I've already said, make sure you are paid by the 55s to 58s. Okay, so we're going to take a look at that sequence and try to understand it. So I'm measuring from the 14 high. So this is like a day type of range. And using that sense of proportion, then I'm looking back here. Remember when I said that 65 to 68, I'm looking at this line as an area that you should start to think about making sure you're paid. And then we get this nice bleed back coming in for the open. So currently, resistance, fighting, support. And this is trying to hold for now. Okay, that is based on the overnight range. Don't forget, we had a electronic trading in between. This box has been rejected, and basis this box, I am suggesting that 82s are still resistance until proven otherwise. That's our key for now. And I do believe at some point today they'll want to try to retest 75 and a quarter if they can. But for now, we are squarely in this box, and this is the range that we are trading right now. And because this is also the same monthly range for the week and the month are the same right now, same look. And notice how important this zone was. We got to the bottom box and stopped there. Right there. I mean, you couldn't ask the market to do any better. Installed up at the top. Note again that, I put out a video last night. Make sure you take a peek at it. Note how that 14, that's a 100-point aqueduct trade, right? Bingo. Coming back down this direction. So do we sell or do we buy? Well, all depends. You don't have to do anything at the open. If you've already had a good day, you don't need to do a thing. Even if you haven't had a good day, you don't need to do a thing. Let it establish a range if you prefer. If you got that last swing that we just talked about, then for sure you should be paid. Because typically there can be a thrust towards the open um, as traders look for the convenient trade. And I'm not clear that's going to happen without a little washout first. So if you're a trend trader, you're going to keep hitting the bounces. And then the idea of not shorting in the hole is valid, but you know what? When traders are trapped, they have to pay up. So it would not surprise me to get a bounce that comes from a lower low. And we're going to keep an eye on this 52 range right now. I think that's the key battlefield. Longs have to defend this 52 area. If not, we're going to go down a bit. And we've already plugged in the targets that we've talked about for the next lows. And they're fairly clear if you have the spreadsheet and you just go look and say, okay, what's next? What's next? Okay, so this is the potential idea of a predictive model. And this 95 back here, this is the area that's the flipper. So overnight, we had suggested make sure you were paid by those 92s. Sink down, we bounce back. And this is a great rhythm because this is like a descending triangle. And then once you see this in play, and you're looking for ideas as to when to time it to hit it, like the trade I'd call last night. You know, you use different time frames. And you can look at things like a 5-minute chart. At the time, I was looking at a 10. Back up to 5s. And I could just see this coming down in the 10-minute chart. And this forces the market down. And then we get a nice bounce, and then we get the profit-taking swing, and here we are. So the best look right now is a 15 because it's adhering to it. And then I want to know the 30 because that's behind us. And it's on that basis, I'm suggesting 82 is still our resistance. Market has to get above that 82. Let's call it 82 to 85, but that's clearly something that unless a news event comes and jacks right through it, currently that looks like resistance. And if they come out with a smoker and some kind of nonsense, PPT comes in and blasts it, drop your trade and then just look for one more. Because a lot of times we'll get crazy bounces out of nowhere. So that's our 30-minute look, and we'll come back to that one as well. Now here's the predictive model showing where our next potential resistance. So I said the 75 could get tested. That's the year open. Obviously, we're at the bottom of this box right now. If we break here, then the next box becomes available. And as such, that would be about a 100-point trade off of that last high that we called the other day at 27.35. That was from our predictive model. So it's been quite a run since that 12.5 when I said that's a major pivot in our system. And we don't make this stuff up. This stuff is, for those of you who are mathematically inclined, this stuff is based on math. And as you can see, it's not going to be 100% accurate, but it's going to surprise you how accurate it is. This is our yearly look, and we can see the box that we are now in. And basis this chart at 82 to 85, big idea right now. We're in this box in the 33 on the bottom side. So very important idea, and risk and reward wise, just a reminder that We've come a long way. I left this here to show you this is where we had our last known resistance. So we've come a long way, and will we get a bounce today? If we don't, I'd be very surprised. And it will come probably when you least expect it. They may make the longs pay up first and then get some kind of a snap. But usually we will get a snap after this type of a move. Problem is you just never know when or where. Sideline for the first 5 minutes. Anybody who is conservative, sit out the first couple of minutes and let the smoke clear. Goal is to take out our VIG every day. Get your 4 or 5 points and then look for more. And at all costs today, do not get trapped trading size too big for your account. We're going to pick the current ranges and then we're going to trade them as they set up. And since the longs have to pay up, then testing support is the first idea. Paid for sure by 52s. This is our angel right here. Let's use the assumption that anybody who is trying to buy probably has a stop around 48. So if the shorts can muster up enough energy, that would be the first target. Try to bust the low. A lot of times, better odds going long, but they first knock out stops. They get the aggressive traders first that love to buy. And in a bull market, normally shorting in a hole is probably the worst thing you can do. But a little bit different when you've got trap traders. So I believe this is a test of support right now. And we'd said earlier, paid for sure by that 55s to 58s. We're in this lower box right now. And I said 52s next. Stops down. If you're playing short side, stops down. Never get beat on this trade now. And then watch today. There'll be some kind of news event or something that it'll try to jack the market before we're done. I saw somebody comment out there, who isn't buying the open? You know, that just shows how immature some traders can be. They don't understand how markets move. You've got trap traders that have to pay up first. Target 48 is hit. Make sure you're paid. Stops down. Next. Anybody that is played short side from the open, get paid. First time into a new low, you want to get paid. Because this is still a double bottom territory. And this is hit and run trading. This is where you got to expect that 48 to 52 range. PPT is going to try to bolster this. You'll have the same resistance until broken. And we've got a trading range. Right now, this is our trading range.